If you're new here, my name's Paula, and on this channel we zoom out. We look at macro, liquidity, geopolitics, and the structural shifts happening underneath the crypto market. Not just the headlines that move prices for a few hours, but the infrastructure that shapes where capital actually flows over time. Because in markets, the big moves rarely start with hype. They usually start with plumbing. And over the last couple of years, something interesting has been happening with Ripple. Most people still think of Ripple as a payments company, a project focused on cross-border payments, faster settlement, and reducing the friction of moving money between banks. That narrative has been around for a long time, and to be fair, it wasn't invented out of thin air. Ripple did spend years positioning itself as a company building technology for international payments. But if you zoom out and look at what Ripple has actually been doing recently, the picture starts to look very different. Because quietly, piece by piece, Ripple has been assembling infrastructure. Not just partnerships, not just software updates, infrastructure. And when you line those pieces up, the Hidden Road acquisition, Ripple Prime, derivatives access through Coinbase, the RLUSD stablecoin, tokenization tools on the XRP Ledger, institutional DeFi frameworks, and new lending functionality, it starts to look less like a payments company and more like a company trying to build institutional financial rails inside crypto. And that is a much bigger story. So let's unpack this properly. The most recent headline that sparked this conversation was Ripple enabling its institutional clients to access Coinbase Derivatives markets. On the surface, that might sound like a fairly routine crypto partnership announcement. Ripple Prime clients now have access to the suite of derivatives contracts offered by Coinbase's regulated derivatives exchange. But when you slow down and think about what that actually means, it becomes much more interesting. Because derivatives markets are where serious capital operates. Retail traders mostly interact with spot markets. They buy Bitcoin, they buy altcoins, they hold them. Sometimes they trade them on exchanges. Institutions operate in a completely different environment. Large funds hedge exposure using futures. They manage risk through derivatives. They build strategies that involve leverage, collateral, clearinghouses, and regulated trading venues. In traditional finance, derivatives markets are enormous. The global derivatives market is estimated to be worth hundreds of trillions of dollars in notional value. These markets exist because large financial institutions need tools to manage risk, hedge positions, and allocate capital efficiently. So when Ripple connects its institutional platform to regulated derivatives markets, the story isn't really about retail adoption at all. It's about infrastructure. But the most important part of this story isn't actually Coinbase. The most important piece is Hidden Road. Back in 2025, Ripple acquired Hidden Road in a deal reportedly worth around $1.25 billion. That acquisition didn't generate the kind of viral attention that some crypto announcements do, but strategically it may turn out to be one of the most important moves Ripple has ever made. Hidden Road is a prime brokerage firm, and prime brokers sit at the centre of financial markets. They provide clearing services, they provide financing, they connect hedge funds and asset managers to liquidity venues. They facilitate leverage trading and manage operational infrastructure for institutional clients. In simple terms, prime brokers are the plumbing of large-scale trading. Reports suggest Hidden Road clears roughly $3 trillion annually and serves hundreds of international clients. That means when Ripple bought Hidden Road, it wasn't just buying a crypto service provider. It was buying a position inside the trade lifecycle itself. Execution, clearing, financing, institutional connectivity. And that matters because financial markets are built on layers. At the top layer, you have traders and investors. Beneath that, you have exchanges. Beneath the exchanges, you have clearing systems, brokers, settlement rails, and collateral frameworks. These layers form the backbone of the financial system. And what Ripple appears to be doing is moving deeper into those layers. When Ripple connects Hidden Road, Ripple Prime, and regulated derivatives venues like Coinbase Derivatives, it's effectively building a pathway that allows institutional capital to interact with crypto infrastructure using familiar tools. But the story doesn't stop at trading infrastructure, because Ripple has also been expanding the capabilities of the XRP Ledger itself. For years, the XRP Ledger was mostly associated with payments and cross-border transfers. But over time, the network has evolved. One of the biggest areas of development now is tokenization. Tokenization refers to the process of representing real-world assets on a blockchain. Assets like government bonds, commodities, equities, or private market investments can be issued as digital tokens that exist on a blockchain network. The appeal of tokenization is that it can dramatically simplify settlement. Instead of waiting days for transactions to clear through traditional financial systems, tokenized assets can settle almost instantly on blockchain rails. They can also be integrated into programmable financial systems where trading, lending, and collateral management can happen automatically. This is why major financial institutions have been exploring tokenization for years. Banks like JP Morgan, Goldman Sachs, and others have been experimenting with tokenized bonds, tokenized deposits, and blockchain-based settlement systems. And this is where Ripple's strategy starts to make more sense. If institutions begin issuing tokenized assets on blockchain networks, those assets will need markets, they will need settlement rails, they will need collateral systems, they will need lending and liquidity infrastructure. In other words, they will need financial plumbing. This is where Ripple's concept of institutional DeFi enters the conversation. Now, the term DeFi has a lot of baggage in the crypto world. During the last cycle, DeFi became associated with yield farming, liquidity mining, and experimental lending platforms. Many of those systems were built for crypto-native users and operated without traditional regulatory structure. Ripple's approach appears to be different. Instead of focusing on completely open financial systems, Ripple is exploring permissioned environments designed for institutions. Permissioned domains allow access to certain markets to be controlled through digital credentials. This means institutions can participate in blockchain-based markets while still maintaining compliance with regulatory frameworks. There are also proposals for permissioned decentralized exchanges, which allow trading activity to occur on-chain while ensuring that participants meet regulatory requirements. Another feature being developed is confidential transfers. These allow transaction details to remain private while still enabling auditability and regulatory oversight. These features might not sound exciting to retail traders, but they are exactly the types of capabilities institutions require before they can participate in blockchain markets. And this is where the conversation around XRP as collateral begins to appear. Ripple executives have suggested that the XRP Ledger could support financial systems where assets like XRP are used as collateral within lending and liquidity frameworks. The network's lending protocol updates have started to move in that direction. Recent upgrades introduce features such as single asset vaults and structured lending functionality directly on the XRP Ledger. Interestingly, the design of this system is not identical to traditional DeFi models. Instead of relying entirely on over-collateralized on-chain loans, the system allows underwriting and credit assessment to occur off-chain. That might sound less decentralized, but it actually mirrors how institutional lending works in traditional finance. Banks and financial institutions assess borrower creditworthiness through underwriting and risk analysis rather than relying purely on automated collateral ratios. So if Ripple is building infrastructure intended for institutional finance, these design choices make sense. But it's important to stay precise here. There's a difference between positioning a system for institutional use and institutions already using it at scale. Right now, what we're seeing is infrastructure being assembled, capabilities are being added, the architecture is being designed. Whether that architecture eventually attracts large-scale institutional activity is something that will unfold over time. Another important piece of this ecosystem is RLUSD, Ripple's dollar-backed stablecoin. Stablecoins play a crucial role in crypto markets because they function as digital cash. They're used as settlement assets, collateral instruments, and liquidity pools across exchanges and trading systems. Ripple appears to be positioning RLUSD as part of its institutional infrastructure stack. Reports suggest RLUSD has already been used as collateral within prime brokerage workflows associated with Hidden Road. That detail might sound small, but collateral is the foundation of financial markets. Collateral determines how leverage is extended, how trade settles, how capital flows through markets. If Ripple can integrate RLUSD into its institutional workflows, it becomes part of the system that moves liquidity. And when you step back and look at the broader architecture Ripple appears to be building, the pieces start to connect. Ripple Prime provides institutional brokerage services, Hidden Road provides clearing, financing, and connectivity to trading venues. Coinbase Derivatives provide regulated futures and derivatives markets. RLUSD provides stable collateral and settlement liquidity. The XRP Ledger provides tokenization, lending, and trading rails. And XRP itself functions as a native asset within that system. When you connect all of these pieces together, a different narrative emerges. Ripple may not be just building a payments company. It may be positioning itself as infrastructure for institutional crypto. And infrastructure businesses tend to behave very differently from speculative crypto narratives. Infrastructure is sticky. Once institutions integrate systems into their workflows, switching becomes difficult and expensive. This is why prime brokers, clearinghouses, and exchanges tend to be some of the most durable businesses in traditional finance. But this is also where we need to stay balanced. There are two very different ways to interpret what we're seeing. The bullish interpretation is that Ripple is positioning itself early in a future where large portions of financial markets migrate onto blockchain infrastructure. If tokenized assets become widespread, if institutions begin trading on blockchain-based systems, if regulated on-chain markets emerge, then the infrastructure supporting those systems could become extremely valuable. Ripple appears to be positioning itself inside that layer. The skeptical interpretation is that institutional adoption tends to move slowly. Financial institutions are cautious, regulatory frameworks evolve gradually. Infrastructure projects often take years before they see meaningful usage. Both interpretations can be true at the same time. Ripple may be building the right architecture for a future that takes time to arrive. But regardless of how quickly that future unfolds, the direction Ripple is moving in is becoming clearer. This is no longer just a payments narrative, it's an infrastructure narrative. When you look at the recent headlines through that lens, derivatives access, prime brokerage integration, institutional DeFi frameworks, lending protocols, and tokenization capabilities, they begin to look less like isolated announcements and more like components of a coordinated strategy. Markets often focus on visible signs like price movements and hype cycles, but long-term value in financial systems often sits underneath the surface in the infrastructure that allows markets to function. Clearing systems, collateral frameworks, settlement networks, trading rails. If Ripple is positioning itself in that layer, the implications could extend far beyond the short-term headlines we see today. Now, I'd love to hear what you think. Do you believe Ripple is genuinely building the rails for institutional crypto? Or do you think the market is still years away from adopting systems like this at scale? Let me know in the comments. And as always, if you want to know the exact strategies we use in the Crypto Wolfpack to make money in both the bull market and the bear market, we've made a completely free course for you. The link is in the description below. And if you enjoy zooming out and understanding the structural shifts happening in crypto and global markets, make sure you're subscribed to the channel. Because this channel isn't about chasing headlines. It's about understanding the structure behind them. Thank you so much for watching, and I'll see you in the next one.